Property investing in the USA. Over the past 10 years, I've gone through the USA property journey with great success as well as making costly mistakes. And I'll be sharing everything with you today so you can learn and avoid those mistakes. Please stay and listen till the end. The webinar will be packed full of content based on my experience of trial and error. Also, for those who stay till the end, I'll be sharing with you a property buying strategy where you can save over $11,000. We will be offering an opportunity to a limited number of investors to work with us to get involved in purchasing high yield, cash flowing USA property portfolios that are generating profits from day one. If that is of interest to you, then please stay in the webinar till the end when we will provide more information. Hello, thank you for joining me. My name is Shah Karim and I'm the CEO of Detroit Invest, and I'm here to share with you a webinar related to US property investments. I've been involved in USA property and UK property for over 10 years. However, since 2010, I've been solely involved in USA income producing real estate. I have concentrated mainly on single family houses, duplexes, as well as apartment buildings, and I've had a whole host of experiences from the good, the bad, and indeed the very bad. Over the last 6 years, through these experiences, I fine-tuned my real estate approach towards USA property investments. And I'm here to share with you some of the mistakes I've made along the way so you could avoid them. I hope that you enjoy the seminar and I hope that you find this very useful. Thanks a lot. I think it's important to detail the experience and academic background of the presenter to kind of gauge the caliber and experience behind the presenter, which of course today is myself. As mentioned before, I'm the CEO of Detroit Invest and I have over 10 years experience with developing real estate assets in the USA and the UK. As an investment manager, I have extensive experience in dealing with distressed real estate assets through the whole life cycle, from acquisition to management, all the way through to disposal. Just to speak my qualifications, I have legal qualifications, which is a Master's of Law, in fact in Commercial Law, a Bachelor of Law degree, and also financial advisor qualifications, such as the CeMAP from the UK. And I have real estate qualifications in residential property management and also a pending award in commercial property management. I'm going to briefly touch on my achievements in the USA. I've been involved in renovating over 100 plus detached properties into single family dwellings or multi-family properties. And I've also developed apartment buildings from small 12-unit buildings to larger apartment complexes. I also have experience in portfolio management. I've managed a large portfolio of 200 plus income producing rental units, and I've developed a strong USA-based team to deal with day-to-day operations such as tenant issues, maintenance, evictions, and leasing. Here's some examples of some properties that I've been involved in. As you can see, these are like larger houses. This, in fact, is a duplex property. Some of these properties have been renovated from the stud. Some of them had a slightly less intense renovation process behind it, and some just merely needed cosmetics. This is one of the apartment buildings that I was involved in, which I renovated, and also another single family house, and again another apartment building. So that just gives you a brief idea of the type of properties that I've been involved in within the US. Let's move on to why USA real estate. Well, I think, and I strongly feel, that the USA has the perfect combination of some of the lowest property price points and highest rental yields in the Western world. And we're going to touch on different aspects of the USA property market and why I feel it's one of the best places to invest. I'll move on to this picture shortly. But number one, let's touch on the first point. Low acquisition cost of real estate. One of the lowest price points for property in the Western world is in fact the USA. As you can see, picture on the right, this property is $55,000, which in the grand scheme of things is not that much compared to a lot of property in most Western countries. There's a very established rental market in the US. A large portion of the US population are in fact renters. Higher yielding rental properties. What do I mean by that? Well, the low prices and relatively high rental income produced from those properties produce high yielding properties. For example, the property on the right, it's a $55,000 property producing $850 in monthly rent. Robust eviction laws. In some US states, you can evict your tenants within 30 days, and that's actually from rent default to bailiff removal. Government funded tenants. This is a great attraction to US property investments. Certain tenants have something called a HUD voucher, which means that their rental income is directly paid to you from the federal government. The leases are generally 1-year leases, and the tenants tend to stay on for the longer term. So in effect, you have government funded tenants. There's a drop in USA home ownership and an increase in the number of renters. So in essence, you have more renters for your properties due to less people buying properties. And also number 8, strong personal experience with the US. I mean, I personally have a great deal of experience in the US property sector. I've been involved in USA real estate investments in over 5 different states, from Florida, New York, Michigan, Illinois, and Ohio since 2004. I'm going to touch on this chart that quite clearly shows the decrease of homeowners and the increase of renters. As you can see here, since the economic downturn in 2008, the renter population has soared in comparison to the homeowner population, and that seems to be a rising trend. This in itself greatly benefits our US property investments and continued investment in the US. Here, let's talk about the type of properties you could buy in the US compared to other comparable countries. Simply put, a US property portfolio investment consisting of 4 individual detached houses can cost less than 1 house in other comparable countries. Here's an example of buy-to-let properties in the UK and another in Australia, using these 2 countries as examples. As you can see, for the cost of 1 home in these countries, you can buy a portfolio of 4 homes in the USA. But more importantly, look at the difference in yield. The UK example produced 3.2% net. The Australian example produced 3% net, but the USA produced 12% net, and it contained 4 individual properties. So you could see, not only in the US can you buy more properties for the same amount as a buy-to-let property in the UK, Australia, or many other comparable countries, but you also can generate a much higher net yield, in this case 3 times more, and still have 4 individual houses as opposed to 1. So this is one of the key reasons why we invest in the USA. Not only is the cost of buying a property less, you generate a much higher net return than in other comparable Western countries. But also you have 4 different streams of cash flow, all for the same cost as one house in other countries. Let's move on. I'm going to go into where is the best place to invest right now. The place that we invest in the USA, and the place that we feel is the best place to invest in the USA right now, is Detroit, USA. And I'm going to go into why we feel Detroit is the best place to invest in USA property portfolios. Well, why Detroit? Because Detroit is the fastest growing property market in the USA, with an average capital growth of 26.1% year on year since 2009. In the metro area, which consists of 5 counties, Wayne County, which contains Detroit, rose by 157.1% from 2009 to 2015. And this is one of the reasons why we've been involved in Detroit from 2009. And here's some of the news that's come out of Detroit. As you can see, here's a further illustration of property bouncing back in the city. There's been a lot of foreign investment in the USA. In this article, it shows Chinese investors have put in 110 billion in USA real estate. Another article that shows how the Southeast Michigan market, effectively the Detroit metro area, is now back to 2007 levels. This article talks about how Detroit's on the road to recovery. And here specifically, this article goes into detail of how foreign investors are obtaining high returns from the Detroit property market. I'm going to show you a clip of JP Morgan Chase and why they back Detroit. It's a great video to kind of understand Detroit briefly and understand the market. So here we go.
Oh, there are many things that make Detroit great. I'd start first and foremost with its people.
Detroit people have grit. They are persistent. They have tenacity.
Tough, hardworking, but friendly. I was born and raised in Detroit. I'm a proud Detroiter.
Born, raised, educated.
I'm not from Michigan, I'm from Detroit.
Detroit is a classic American city.
Detroit's a city that has a really proud heritage.
The arts and the people, the work ethic.
The auto industry was born here. We have some of the best manufacturing and engineering talent in the world here.
It's a city where a lot of important things have happened.
But it's been through a number of really difficult periods. This city had almost 2 million residents. It's currently about 700,000. We've had a lot of blight. City services have struggled.
We've had challenges on the political leadership side. We've had challenges really since the mid-50s.
One of the biggest issues that we face is just the aggregate size of the task.
Detroit is almost 140 square miles when we look at it as a landmass. You can include Boston, Manhattan, and San Francisco in the city's borders and still have room around the edges.
Detroit needs investment. It needs consistent investment. It needs partnerships.
We know Detroit. Our history dates back over 80 years, and while we're doing a lot in Detroit, Detroit needs us to do more. Over the next 5 years, JP Morgan Chase is committing $100 million to Detroit.
This is the largest corporate investment that's ever been made in a city.
JP Morgan Chase is really on the leading edge of investing in Detroit's revitalization.
This capital will help build charter schools, affordable housing, help small businesses and neighborhoods throughout Detroit.
We are also going to help with workforce training, give people the skills to find jobs, but also to flourish in jobs.
When we look at cities across the country, small businesses end up creating more jobs and more economic growth than almost any other participant in the sector. So we're investing some of our small business expertise and philanthropic capital into businesses that will represent companies that are in neighborhoods across Detroit.
Some of our money is going to help with the completion of a big project called M1 Rail, which is going to connect the Midtown and the downtown areas.
This will be a streetcar-style rail project that will be a huge boon to new development that will increase job opportunities. One of the things that I think is really exciting about this partnership with JP Morgan Chase is that they really did their homework, and I think that's going to accelerate their ability to move the needle.
People are now realizing what so many of us who have been here for a long time knew, that there are so many jewels here. And now there is a business case being made. There's investment opportunities. I'm proud to see that JP Morgan Chase has decided to take this type of leadership.
I hope it will spark other companies to follow us and make similar commitments.
This is aggressive stuff that the bank is doing, and we are most appreciative. This allows us to do what we do to fulfill our own mission and purpose.
The people of Detroit aren't hoping for Detroit's future to be positive. They're banking on it, and so are we.
Where we invest in Detroit? Well, I hope you found the JP Morgan Chase video informative to give you an overview of Detroit and why they've been backing the city. Here's where we invest in Detroit. This map here shows that we only invest in very specific parts of Detroit, and then only within certain neighborhoods within Detroit. Looking at this map here, we generally only invest within the red lines, and within these areas we particularly focus on residential areas highlighted in blue, as you can see here. So pretty much 5 core areas. In essence, we only buy properties within a segment of around 10% of Detroit. So we're very specific where we buy in Detroit, or which section, which part of Detroit we invest in, and which particular locations within that specific segment that we invest in. And then it breaks down to the streets and the blocks and very kind of detailed information about the property and its immediate surrounding areas. Why we invest in these locations, or these very specific locations, is due to the following. Stability of the neighborhood. This is very important, as it must be the area must be sought after by renters and homeowners alike. Brick houses. I have a personal preference towards brick-built homes, as I find they are located in more desirable areas. Ease of rental. These neighborhoods are easier to rent and attract better quality of tenants. Desirability of area. They are located in areas which are seeing recovery, and they're also areas targeted for improvement by the City Council. Occupied housing stock. These particular neighborhoods have limited abandoned and derelict homes, or at least these homes will be demolished by the council. So when you're looking at an area, then you always should look at how many properties are actually occupied, and if there's any abandoned structures, neglected houses, derelict houses. If there is, then you pretty much should look at another street because these things really do affect the rentability and the desirability of the area. And the reason why we've chosen these areas, because we find a positive result in all these other mentioned criterias, is because it most importantly provides steady cash flow, which is the most important thing with income producing properties. You need to ensure they provide steady cash flow, and by following these steps or looking at these particular aspects of a neighborhood and a property, you should be in a position to generate a steady cash flow. I'm going to show you the type of areas that we invest in. It's great talking about it and showing that to you on a map, but by looking at a video, you pretty much could gauge the type of neighborhoods that we invest in Detroit. So here goes. As you can see, these are the type of neighborhoods our properties are located in. Again, wonderful brick built neighborhoods, very good upkeep, pride in the homes, pride in the streets, pride in the neighborhood. And we really focus on these areas because once we do purchase properties in these locations, then we have desirable tenants that are looking to rent in desirable neighborhoods. So one of the reasons why we're very specific in where we invest and how we've invested. I'm going to go through a number of points, 8 specific points on the key mistakes investors make in Detroit. I've met a lot of investors along the way, both local, national, and a lot of foreign investors. And when things go wrong, it's usually pinpointed to one of these 4 factors. So let's just go through it. Number 1, buying based on price. It's cheap for a reason. A couple of projects I was involved in the early days. I purchased each house for over $3,500 in an auction, but I actually regret wasting the money. The cost of the rehab was uneconomical, and they were located in below average neighborhoods. In the end, I let these properties go back to the council. It was a costly lesson, but one that taught me it's cheap for a reason. Obviously, if you're buying houses for $3,500, you think you initially would think it's great because you could rehab them and make a relatively good rental property, but in reality it doesn't work because it's cheap for a reason. And the same goes for $15,000 houses and even $20,000 houses. which I'm going to go on to, buying fixer-uppers. That's another mistake people have made in Detroit. When you buy a fixer-upper or a rehab home for rental purposes, you need to factor in the construction costs. The average cost for construction in my location is around $15,000, plus expenses such as property tax, insurance, security costs, management fees, and of course build contingencies. Because no matter what you do, usually things do spiral out of control in terms of prices, or there's unknowns, or there's a underestimation in materials or labor, etc. So you need to really factor in that, and also overruns when things take longer to complete. Then you need to take into account the loss of rent during the renovation. So a lot of times for a low cost property, say worth $50,000, buying a fixer-upper to rent may not be worth it. Not understanding the neighborhoods. One thing with a lot of neighborhoods and blocks within urban areas in the USA or larger cities in the USA is that each street and block is different, and you need local expertise to determine the better streets. Literally 2 streets away, you can make your house completely unrentable or hard to rent, which is something that you don't really want, especially for an income producing property. So knowing your area, knowing your street, knowing your block is vitally important. And if you don't know that yourself, then draw on local expertise to determine which is a good area, which is a bad area, which area is likely to rent quickly, which area is likely for it to be difficult to rent or pretty much unrentable. Number 4, buying single properties, not a portfolio. Now, this is one of the major mistakes a lot of people make when they're investing in Detroit. And here's why. Investors face considerable risk by buying only one property in Detroit, which is likely to cost them additional personal funds if the property is vacant. By obtaining properties in a property portfolio, you will have, number 1, less risk. So if one property is vacant, the cash flow from the other properties will pay for the expenses of the failing property until it's cash flowing positive. Number 2, lower closing costs. By buying a group of homes in one transaction, you can save, on average, $7,500 in closing costs. And that's the equivalent of 1 year's rental from one property. And number 3, and most importantly, financial self-sufficiency. You can obtain better costs due to lower maintenance costs and management fees to the bulk property discounts by having a group of properties as opposed to one property. Clearly, you're not going to get the same level of pricing if you have one property compared to if you have 4, 8, or 12. And also, the financial self-sufficiency comes back to the cash flow position. If you have one property that's not that's become vacant, needs some work, where there's loss of rent, or you need to carry out an eviction, you would be able to cover that with the rent coming in for that month from the other properties. However, if you have one property, then you need to make personal investments in there. So that's really where a lot of people have really gone wrong, in my opinion, in Detroit, and that's not buying a portfolio and just merely buying just one property in the city. Number 5, again, another mistake people make, and this is pretty much based on thinking that property investment is a risk-free return. Property itself is not a risk-free investment. And I'm really surprised when I speak to novice investors who believe they could buy a $40,000 home and generate a 12% net return consistently year in, year out. Unfortunately, it doesn't work like that. There's always going to be maintenance. There's always going to be the odd eviction. There's always going to be a vacancy here and there. And you are going to have void periods finding a new tenant and reoccupying the property and obtaining rent from it, especially over the long-term period of the investment. So it's essential to be realistic and realize that, yes, property is a great investment, but there are risks. but in comparison, your net return is a lot higher than other forms of investments. So realism is very important here, and thinking property investment is a risk-free investment is not the way to go. Number 6, owning a rental property makes you a landlord, and you must spend money on upkeep. I've seen time and time again people not really understanding this. Once you purchase a property to rent, you are a landlord. Effectively, you're a landlord. Yes, you're a property investor, but you're also a landlord. By being a landlord, it's vital to maintain the property and continually keep it attractive for tenants, whether it's new tenants or existing tenants, because you really want to keep a property for the long term, and you want to keep a long-term tenant that pays rent happy. And throughout the period of your investment, it's good to make improvements. Not only maintaining the property, but if you can make improvements, then you'll not only increase the desirability of the property itself and add value to it, but you also keep the existing tenant happy, or new tenants looking at your property and making sure it's desirable for them to rent. Number 7, treating the property as a cheap rental property and doing cheap repairs. Sometimes when you're dealing with properties like we do, sub $60,000, a lot of people in their mind think because the property is worth, say, $50,000, you could do cheap repairs on the property. But realistically, just because the property is worth $50,000 doesn't mean you could get away with cheap repairs, as it's counterproductive and you will lose rental income. Good tenants do expect their rental property to be in great condition, and they're not prepared to live in a shoddy house. And frankly, they don't really care whether you purchase the property for $50,000 or $150,000. They want a good standard of property. And by having a good standard of property, then you are able to realize the long-term rental income. By doing cheap repairs, a good tenant would want to leave, find a better property. Your property is now going to end up in a void period and you need to find a new tenant. So to find a good tenant, you need to make sure your property is in good condition. And I can't really stress this point enough, because no matter what the cost of the property is, the expectations of tenants is very, very much they want a good quality property, especially if they're paying good rent. Number 8, and this is vitally important too, not selecting the right management company. I cannot stress this enough, but buying a property is only the start of the journey. The rest depends on good management. And good management isn't when things are going well. It's when things go wrong. An experienced property management company will be able to handle evictions quickly and maintenance issues immediately if they're good. And you'll be able to tell how great they are when things go dramatically wrong. It also helps when the property management company are also experienced investors themselves, as they fully understand the cash flow concerns faced by individual landlord investors. So when you're looking at a property management company, make sure they have elements of good property management, an eviction process, a leasing process, a maintenance team, and also look at it from a commercial point of view. Do they understand your investment? Do they understand the basis of your investment, what you're trying to achieve? And a lot of management companies, you would find, they're there to manage a property, whereas good property managers want to manage the property as an investment, making sure that your property is always filled, the maintenance itself is limited, and they select good tenants, because at the end of the day, a good property management company wants you to succeed as an investor and a landlord, as well as just a property owner. I'm going to kind of go into what we can provide as a company. Essentially, if you are looking to invest in a US property portfolio, well, we can help you by providing you with professionally managed properties with long-term tenants, which will enable you to receive rental income from day one. And here's an example of what we have available, or the type of properties that we have available. We specialize in property portfolios. And here's an example of one of our property portfolios. As you can see here, it's a collection of 4 properties. The net return is 12.5%, and the sales price is $215,000. Here's another example. And these are slightly larger homes. Again, a collection of 4 properties. So within the portfolio, you can have 4 properties. And the net return here is 11.3%. The sales price is $243,000. If you are interested, we could send you the full report upon request. And again, these properties have long-term tenants, they're cash flowing, they're immediately generating income, and by investing in these portfolios, then you would be receiving rental income from day one, and you have long-term tenants. And also the properties were renovated by us. Now, this is for first-time portfolio investors, which many callers, many people on the webinar are. If you're a first-time portfolio investor to our company, we are offering you the following. We would pay for the closing costs. We would provide you with 12 months insurance policy. We'll set up your US LLC corporate documents and obtain your US federal tax ID number to operate in the US as a corporation, and there'll be no management setup costs. So by buying being a first-time portfolio investor, you would benefit from a saving of $11,500. Okay, so as we've got a large number of people on the webinar, let's just go through the questions that's been building up throughout this period. Okay, one of the questions here is, are there any restrictions on non-US citizens buying property in the USA? Well, no. In fact, there's actually no restrictions on non-US residents at all. There are restrictions for investment in very high level or high value transactions, but most real estate in the US doesn't have any restrictions. And also, if you purchase a property in the US, you're treated the same way as a US citizen. So there's no distinction between somebody buying that's a non-resident, or a non-US citizen, and somebody that's buying that's a US citizen. In terms of the law, it is pretty much very straightforward. You are treated very equally. So I hope that answers that question. What's the demand for Detroit investment properties? Well, there's a strong demand. There's been a strong increase in demand while I've been operating in Detroit for investment properties, as many investors have realized that the great amount of cash flows that could be generated from Detroit. So as a result of that, property prices have increased, as we showed earlier in the webinar. But that said, there is still great cash flow opportunities within the city. Just going to have a drink of water. Okay, sorry about that. Right, let's carry on. Oh, and here's another question here. This is quite an interesting one. I've seen properties in Detroit and other US cities being sold for a much lower price, and even for $1,000. Right, okay, the $1,000 homes. Yes. There's a lot of media articles on that, or there were previously. But yes, these are the infamous $1,000 Detroit homes publicized by the media. Houses like these are often so derelict, burnt out, or abandoned, and have substantial unpaid taxes and water bills registered against the cities, which are called liens, and need total refurbishment. And also they're in neighbourhoods of very high crime and social neglect. So pretty much by investing in some of these houses for $1,000, and I admit I have actually purchased properties, as I mentioned before, for $3,500, it's not money well spent. They are actually very difficult to make an income from after you purchase them. So what happens is when you are purchasing a property for $1,000 that's derelict and abandoned, then if no improvements are made to the property, which in a lot of cases is not economically viable to make any improvements to the property because you're not really going to get the value back or collect a decent rental income from the property if it is renovated. So effectively, after a year, if no improvements made, such properties which are neglected, the city council would seize them, and then they would probably demolish them. And there's a lot of demolition going on in Detroit on low value properties or abandoned structures. So it's not really worth considering that. But yeah, I mean, I always see the questions about the $1,000 homes. Yes, the $1,000 homes, just to summarize, is not easy to make money from. And in fact, if you're buying a $1,000 home, you're not going to get a property whereby you could just move in there and rent it out for $1,000, $700 a month. Doesn't happen, I'm afraid. Okay, another question specifically about Detroit. What is the property market like in Detroit? Okay, well, and another similar question here. What is the house price range in Detroit? Okay, yeah, I could probably merge the answers here for both questions. Well, all US cities, and in fact a lot of cities around the world, have bad areas and good areas, and Detroit is definitely no exception. Homes in Detroit range from $20,000 for a property to around $5 million, and you have low cost apartments and you have grand mansions, so it's pretty much a mixed bag. So the property market, in answer to the first question, is varied, and the house price range, in answer to the second question, is varied as well. Here's another question. Is the rental market good in Detroit? Okay, that's a good question. Answer to that is yes and no. Yes, it is a great market, great rental market, if you have a good quality home in a desirable neighborhood. As you saw from the video, a lot of our homes fall into this criteria, and also especially based on the criteria that we have that I mentioned previously. So yes, if you have a good quality rental home in a desirable neighborhood, then the rental market in Detroit is fantastic. And no, going on to why I said no. No, if you have a poor condition home in low quality areas. The rental market for landlords at the moment is buoyant, and there's no shortage of tenants. There's substantial demand from families seeking good quality homes to rent, but only in the better parts of Detroit, in my opinion. And hence the reason why we're very selective of where we purchase and what type of properties that we purchase. So if you're buying a bad home in a bad area, no, the market is very, very bad. But in a good area, it's very good. Another question. Let's just take a couple more questions. Do you offer property management? Yes, we do. We have our own established property management company, which is an excellent track record of dealing with investment properties in Detroit. And that's one of the, and we manage portfolios for many investors from various parts of the world, specifically the UK, Ireland, Australia, New Zealand, Singapore, and expats from the Middle East, or actually Middle Eastern investors as well. So yes, we do provide property management services for our existing clients, existing portfolio clients. And let's just take another question, because there's quite a few questions that are very similar to questions that I answered earlier. Okay, if properties, this is quite a good question. If properties are cheap, if properties are so cheap, why do the tenants not buy the properties instead of renting? Fantastic question. Let me go into this. This is a great question. Properties, what you need to understand from the point of view of the tenants is, firstly, properties may be cheap, relatively cheap, say under $60,000. However, it's difficult for potential homeowners at the moment to obtain mortgages. Therefore, in order to buy the property, they need to buy the property cash. If the average gross household income is $30,000, which is average for Detroit, then after taxes, income taxes, rent, household expenditure, car payments, health insurance, and other bills, a lot of times it's difficult to even save 10% of that. Say 10% of 30,000 is $3,000. So in essence, it would take a tenant over 20 years to buy the property with cash funds. So therefore, many tenants are unable to buy such properties that they rent. And this will continue to be the case until there's a wider availability of mortgages. And moving on to another subject, if the mortgage market does come back in Detroit in the manner that it was active before the recession, before 2008, then the value of the properties do increase significantly, and also the activity of purchase would increase because people have access to mortgages. So yes, it's not easy for a tenant to save up $60,000 cash from a $30,000 household income in order to buy the property. Okay, so I think that pretty much covers most of the questions, actually all the questions now, looking at the list for this particular section. What to do next? Well, if you're interested in acquiring high-yielding USA property portfolios, or would like to discuss further aspects of USA property investment, or indeed our available property portfolios, then we can arrange a one-to-one call or a face-to-face meeting if you're in the UK. You should be able to see a link at the bottom of the screen. If you just click that link, all you do is fill in your name and number with a time slot and we'll get back to you. But don't forget to insert the international dialing code. I can actually see many people here from different countries. Wow, looking at it, as far as New Zealand, South Africa, and also Canada. Oh, that's fantastic. Also, please note our limited time offer. For the first time USA property portfolio investors with a company, we will pay for your closing costs, 12 months insurance policy for all 4 properties, and we will pay for setting up your US LLC, corporate documents, and obtaining your US federal tax ID number, which will save you over $11,500. So if you would like to take advantage of this, please contact us as soon as you can. Please remember, this is based on a first come, first served basis. Well, thank you for participating today. I hope you found the information useful and beneficial. If you have any questions or queries, please feel free to contact us and I or a member of my team will get back to you. Thank you very much. Goodbye.